How do you guys think through just the idea of narratives for BTC?
Took a big hit last week. Prices are in the red again this morning. Bitcoin has now lost more than half its value since its record high last year.
Volatility is not necessarily a bad thing, and it's normal to see 30 to 50% volatility in the crypto markets in any given month.
When I think of narratives, actually, I think of like the newspaper or any, like almost the Bloomberg report. Stocks fell today because so-and-so did this, or the market felt fear because of that. And it's absolutely bullshit, right? Like if you're in the market, you go, no, actually it hit the technical resistance and there was a bearish divergence and we rejected off that because all traders will have to sell because of that signal. That's why it rejected, and then someone found a narrative that also coincided to this day. And so when I look at the Bitcoin price, I'm like looking at fundamentally who's buying, who's selling. And then you can attach like, right. So like recently, the price has sold down very, very quickly off a week ago. And the narrative that's been attached to it has been, it's tax season sell-off. And wow, they left it last minute because the 18th of April is the deadline for many Americans, and there's assumed that that's tax sell-off. And you look at the data and it's like, well, overall, there was very mild selling from hodlers. Overall, spot was buying, mass amount of coins moving on-chain, off the exchanges. Actually, spot was buying. Who was selling? That was the futures markets, particularly the calendars market, which is linked to the CME and the sophisticated institutions who are trading the correlation to tech stocks and the S&P. So you got this narrative that it was a tech sell down, but actually it wasn't. It was traders trading this correlation. So that's what I think about narratives in terms of price action. Like I think they're too coincidental to some sort of reasoning, but not backed by any kind of the fundamental data you look at if you're looking at the markets properly. So yeah.
Do you think narratives
in terms of what? Yeah.
Oh, sorry. Go ahead. Finish your thought.
Well, in terms of what you just outlined, like yields increasing, tech stocks get pressure. Then that is right. It's those guys that are selling down Bitcoin, but you can see that in the data. And I think that's but like I think it's very hard to attach narrative to without evidence. Just thinking, it's correlation is not causation.
Do you think there's a reflexive aspect to narratives though? And PlanB, I know you want to answer, so sorry for hopping in before you spoke, but
no worries.
Do you guys think there's like a reflexivity to narratives as price drives up, right? The whole kind of the whole Soros theory of price drives up, their narrative follows, that drives price up further, which pushes the narrative even further and kind of has this positive feedback loop. Do you think we get that in Bitcoin, for example, like with the inflation hedge narrative at the end of 2020, or do you think it's just irrelevant?
I think PlanB has taught me. Actually, a lot of people have taught me who have come from mainstream finance world. That might have been true in 2017, but man, there's the beautiful carry trade to take the other side and yield. What is it like? I think it was up to 60% annualized, taking the other side and taking the heat out of the market. So I don't think it's so reflexive now, and you see that with a blunt top and a rollover. None of this exponential spikes you'll see where people can't take the other side. So I not so much now, not for Bitcoin.
No, I was about to say the exact same thing. It's I mean, narratives is nice, but it's for newspapers, for marketing stuff, and there are some deeper trends, some deeper things going on here, and it's like Willy said, it's of course technological. It is the better money. So like the internet, if you want it or not, it will be the thermodynamically better thing, and it will win in the end. the Earth is round, not flat, and whether you spin a narrative around it that it's flat, it doesn't matter. Maybe it delays it a couple of years, but it will win. So, and also financially, it is an asset. It is an accepted asset, more so than a couple of years ago, and markets are maturing. And the cash and carry trade that we talked about a lot last year almost completely disappeared, which is normal, which is a sign of maturing markets, because a contango premium of 40, 50, even 60% is can't go forever. People, so in my worldview as an investor, as an ex-institutional investor, it's all about arbitrage. And in the beginning, of course, there was arbitrage in Bitcoin only, with exchanges in Korea and exchanges in Europe and the US, and then making catching the differences, which was an easy way to make money. And now the future, the cash and carry trade was of course a very easy way to make money, and everybody and his mother is doing it. So now that premium has gone down to like 5%, or what is it today, which is still better than in Europe. You're minus 1% on your bank account or something. So there's still, but those parties are now in place. They have their funds. They're doing this trade, and this market is more efficient and bigger and stronger. So what's left is, for example, the volatility trade. That's one of the big things. You can still make 25% a year with cover call writing and capturing the insane volatilities that have lowered, by the way. But yeah, it's obvious for Bitcoiners that the trend in the price, the fact that it's better technology and it will win and it will be adopted over time, is larger than the volatility that's caused by narrative X, Y, Z. But so that's one of the other things. And of course, the big play we're seeing right now, and it's very interesting, is the arbitrage with the fiat world, because Bitcoin can be seen as a foreign exchange thing. So not even a tech stock or a commodity, but a like a currency. It has a interest rate, and you can exchange it with other currencies. So you can make very hard arbitrages there with enormous sums of money. And it wouldn't surprise me. Actually, I know that some traditional parties are doing that, and yeah. So I guess with all the central bank, as long as the central banks do crazy stuff, which they, in my view, have to do, because they've positioned themselves in a corner where they can't get out. They can't raise the interest rates because they will kill the stock market, bond market, real estate market, everything, the economy. Nobody wants to do that. So they're doing stupid stuff like printing money and more, while saying they're tapering, which, well, I think is the only thing they can do. But that creates opportunities for arbitrage-minded people and just savvy investors. So that will be a big drive in the market for years to come, I guess.